Good morning, StockTwits Nation. It is Thursday, March 20th. I think it might be the first day of spring. Shy and I were just catching up before we got on the air, both in a goofy mood today, so this should be a good one. We got March Madness coming in hot. Shy, tell us about your bracket. Who you got?
Yeah, so it's funny you said I didn't actually know it was the first day of spring. Makes sense of why my allergies are just destroying me, making me feel like I'm high right now. But regarding the brackets, like Duke, it's Duke all the way. And I went to UC San Diego, so we were talking to Keith, our producer, and backstage, and like I think it's a fun little mental exercise comparing like the teams you pick with actual stocks. So I have an emotional attachment to UC San Diego. It's their first year. They're eligible for the tournaments. And I think they're by far the most popular Cinderella team, which is really interesting to see because they were a D2 team just a couple years ago. So like I'm picking them to go far, and they're like my snowflake of the bracket. And I think you can call out that Duke might be the Nvidia. You can say UConn might be the Apple. It used to be great. Now it's struggling. And well,
What do you
I think
say?
it's
What about St. John's? Like underappreciated, gritty.
St. John's,
It's a tough one,
underappreciated
right?
gritty. That's a great one. I mean, who has a great CEO behind them? I'd say
The
who?
Palantir?
No, Palantir is has always been great though.
Oh,
That's the
okay.
issue. So who used to be great?
Okay, who swooped
Stopped
back in to save
and
the day?
returned.
We'll have to let us know in the chat who you
Yeah,
think,
that's
which
a good one.
CEO embodies the Riz of Rick Pitino
I mean,
at 72 years old.
listen, it could be Google in 2026. That's what I'm thinking maybe of like
Google
everyone's
St.
saying
John's?
everyone's saying that like AI is gonna be killing them, like they're
Whoa.
screwed.
Okay.
But this acquisition of Wiz, they're fully going on cloud. They're like there's going to be some kind of demise, not demise, but like their search monopoly will trickle lower and lower and lower, but it's fine because I think they're going all in on their cloud security business, and that might be a bigger tailwind in the agentic AI world than their search monopoly. But we'll see. I think that's an interesting one. But that's a
Uh,
great. I'm gonna think about that even
yeah,
more.
I like that. Let us know on X and in the chats. We'll be watching the games alongside you guys. And of course, the big news this week, Robinhood adding prediction markets betting to their experience. So now that's all in one place. I think a lot of interest this week in seeing what the activity in action looks like on Flutter, on DraftKings. Shy, do you have any predictions for that? It seems like every year it's just more and more money's flowing through these platforms.
Vices are increasing. Degeneracy is at an all-time high. I think, especially in our demo, we've been exposed to a very it's been very easy for us to bet stuff. It you don't have to go to Atlantic City, you don't have to go to Vegas. You can just do it on your phone, and it's pretty convenient. Where I didn't want to. I'm part of a poly market bracket this go around, so like that's where I'm participating in the March Madness. But like I was looking at my positions on Robinhood, then all of a sudden I see this prediction market, and I clicked and looked, and now like I'm looking at the odds now. Now I feel like why not spend a couple $100? It's right there. I have a cash in my brokerage. Might as well play around with it. Like I do far more speculative in my trades. Like why not do this?
Yeah.
I think that's what they're untapping, which is you can say it's dangerous because I have a fiance who keeps me in line. Of if I get really bad, she will just. I'm scared of her a little on that. So I think if you don't have that kind of crutch to protect yourself from just going full degen mode, watch out. But I don't know. It's a TAM expansion opportunity, and for them, they weaponize volatility for crypto. Why not weaponize volatility for degeneracy?
Yeah, or just life. I mean, I used to be a purist in like the confetti thing. Like I was very like, oh, and it's just like it's just UX now. It's not I don't think it's like malicious or anything. These are just how people interact with
Mm-hmm.
products and tools and the spin you could but like if I'm like Robinhood PR, my spin is like okay, well maybe someone only is doing sports betting now and they start doing that in Robinhood and then they make like 200 bucks on some parlay that they put 5 in and then they float that over into a Roth. I don't know if that's going to happen, but you could have that interplay. And I know when I was at Public, which is a brokerage, we would do studies, and a lot of people that came in and initially, like their first purchase was like Dogecoin or something speculative. Over time, they overwhelmingly diversified away from that. So I think the point is like sometimes people's first understanding of how these things work is crypto or betting, and maybe it's not bad that more people are getting access, but we shall see. Like once that gets ripping, I can't wait to see their financial statements and see how much money they're making off of that.
Well, I think it's also like you're calling us a lot of people are a lot more speculative when they first start something. I think it's the psychology of playing catch up. They haven't been participating in these markets for years, decades, and they feel like, oh man, the market's gone up so much. Like I want to do some kind of speculative play to catch up to everyone else because I need time back on my side. I think that's why once they make that alpha, which everyone, let's be honest, past 2 years, point your finger up in the air, you probably made money. It wasn't that difficult past 2 years. Now, that's a little dangerous. If you get into the crypto markets like 2 months ago, you're holding a bag all of a sudden. You're holding a 30% bag at least on a lot of these names. And I think it's kind of indicative of like where we are in the market. And I think, yeah, we'll see. We'll see if a bear market affects degeneracy on the predictive markets. I'm really curious to see about that where they're losing money. Are they gonna? Do they feel tilted enough to make it elsewhere if the market's not giving them that? That's what I'm curious on. If that's the case,
Oh yeah.
Robinhood has a full ecosystem to capture that.
That's a good. I never heard anyone articulate the catching up. I think that's so true. It's like, oh, let me just swing for the fences and see, because we saw a lot of that in 2021, and people got FOMO. Um, Speaking of catching up, let's catch up on the big Fed meeting yesterday. Rates held steady. A lot of pushback on Powell's use of the word transitory. Any surprises for you in that session yesterday, Shy, or any of the commentary that came out of it?
Yeah, I mean, I was surprised how green we were because, like, yes, Powell spoke. It was somewhat dovish, but let's be honest. Like, the narrative has didn't change at all. We still have a decelerating economy layered with persistent pricing pressures via inflation. There is a looming potential that unemployment will continue rising, and it breeds hesitation, and that's the issue. It's a very noisy market. The market hates uncertainty. In this high stakes poker game we're part of, or Terra Force, the reason we're pulling back so aggressively is because there is so much noise and there's so much hesitation of what's going to happen. And I think the central bank's move to like slow the balance sheet runoff acknowledged that this is really rough times. Like we don't know what's going to happen. The economy and the market's very fragile right now. So I think the market pinpointed to that slow balance sheet runoff as, oh, QT's over and QE might begin, and they were front running it. However, I do think yesterday was just another data point to signal just be cautious, guys. Like be patient. It's not going to be a V-shaped recovery. Like we're really structurally broken on the charts technically. Like we really are. It's going to take some time to recover from that. And just Trump's tweet last night in the middle of the night showed how fragile we are. It just reversed 1% down in the middle of the night when everyone was sleeping. It's like you can imagine going to bed like, oh man, today's gonna be a great. Tomorrow's like thinking tomorrow, today, now, it's gonna be a great day. 3 straight follow throughs. Man, we're back. We're back. All of a sudden, you wake up, boom, sucks. And I
Yeah.
think that the absence of another data point I want to call out is like the absence of a VIX compression does remove a key, like like a very key ingredient for a reflective rebound. And I think that's going to leave bulls without the talent they typically rely on at moments like this where is the bottom priced in. So I do think patience isn't just advisable, it is necessary. And these are kind of the moments where you can't have blind aggression. You can't have premature positioning. Like yesterday, you be burnt the pre-markets. And I just think you have to be patient, sitting in silence. I haven't added one stock this week. It's been just, I'm just
Yeah.
waiting.
Yeah. I think the thing with that post on Truth Social is this isn't even a political statement, but he is such a main character that like if he is not the story for like 12, he will make it that way. And like that's
Hmm.
happening with the economic stuff where it's like sure there's other reasons and there's like a plan they have, but like I just sometimes I feel like it's this like attention seeking behavior where things are kind of calm and steady. It's like, oh, let's put the 200% tariff on wine, like let's get people talking. And it is this like it's a weird entertainment ecosystem in the world because these are like actual things. But to your point, and there was a I think it was a Bloomberg article about this, or it might have been Business Insider, but basically saying like Sunday night's the new Monday morning in the markets because like there's news drops now
Mm-hmm.
on the weekends. And I remember Keith, our producer, a few weeks ago made a comment like, "Oh, we got to catch up from the weekend news." Like that's new. Usually nothing happens on the weekend.
Yeah.
So, and then you see Robinhood and Nasdaq extending their trading windows, and it's just all becoming real time all the time. And I'm curious for you, Shy, someone who's been trading a while, like how does that shift how people are like following the news and reacting to things when it's always on? Like we're not Trump. We gotta sleep.
Yeah, it's a lot more reactive, like you mentioned, and I think it's a lot more less thought out moves, and that makes people hold the bag or makes people do things outside their realm or comfort lane because they feel like it's going to move so quickly that they have to act before thinking.
Yeah.
And that is troublesome. And in Trump-led presidency, like we said, like this is going to be a whole new regime on volatility. Like it's going to be action packed. It's going to be quick moving, and it's the golden era for like people like you and me, where he's giving us content now to talk about. Where in a
Yeah.
Biden presidency, like there was some dead weeks, dead months. Like it was kind of dead. Now it's like there's so much.
Yeah, it's a lot. Let's flip over. Let's see what's trending over on StockTwits. What you guys are talking about. Again, drop tickers in the chat topics or on X. We'll try to get to them. There's a lot going on, as always. I'm looking now and seeing. Okay, the real Jerry Maguire is in the chat. I love that movie. Let's start out with Pinduoduo because this is an interesting one. This Chinese company, they own Temu. Shai, have you ever ordered anything off of Temu? You don't seem like a Temu kind of person.
I don't trust them, and I don't want to be trapped into those stupid ads they do, which is disgusting. But like,
Spin the wheel.
yeah, it's
Yeah.
oh my god, it's so annoying. But yeah, Pinduoduo, what is it? Is it down like 6% this morning?
Yeah, they missed.
So
Yeah, go ahead.
again, no, again, like I think Pinduoduo is the biggest trap on the in the Chinese bucket trade, where everyone just says, "Oh, they're so undervalued. They're so undervalued." There's a reason for that. They don't have emotes. Like they really don't. Like all they do is like they their whole strategy depends on just being the cheapest. Like that's literally it. Like we'll offer similar product at a much cheaper rate. That that can only take them so far. Like they don't have an ecosystem like the Amazon, Mercado Libres, or even Alibaba. Alibaba has an ecosystem. So I think that one sure you might think like, oh, consumers are struggling, so like they're going to have to like they're just gonna go to the cheapest product out there. Okay, but there is something called a flywheel effect or a network effect where Amazon's like the Amazon, like they're offering it Temu like products, and they're probably gonna price match a lot of what the products on Temu is because they can afford to do so because they have so many different arms in their ecosystem where we'll sacrifice this e-commerce side or the Temu product competing product side because we'll make it up somewhere else and they're all connected. Temu doesn't have that. So like they missed I think they missed their revenue because their take rate was getting lower and lower
Yeah.
due to the competitive pressure. So like cheap can get cheaper. Invest in companies who have a competitive advantage or a moat. Don't invest because oh it's super undervalued because you will get burned. Just look at, I mean, I don't want to say look at PayPal because PayPal's doing. No, I will. Like PayPal 5 years ago is different than PayPal now, and PayPal if you bought PayPal 5 years ago, everyone kept saying, "Oh, they're so undervalued. Like they're so cheap." Look at their take rate. Like their take rate has diminished because of competitive headwinds, and they lost out on that Venmo first mover advantage. Now
Mhm.
there's competing products out there like Zelle, etc. So cheap can get cheaper. Remember that lesson.
Yeah, I think going back really quick, you started talking about something interesting that I've been curious about. For someone who's a consumer looking at Temu, Alibaba, it's kind of the same thing. It's like two places to buy things from China super cheap. When you say Alibaba is an ecosystem, what do you mean by that? What other components or elements do they bring to the table that a PDD does not?
They have a cloud. I mean, they have a cloud service provider. So like essentially their e-commerce business is powered by their cloud. So like if they make their prices cheaper on their e-commerce side, it's going to create more volume to go in to their e-commerce website, which they'll benefit from their cloud division. So like
Mm.
it'll offset each other. So cheaper products come, more volume will make it up on the cloud side of our business. For Amazon specifically, like everyone's a Prime member. Everyone in the world is a Prime member. They have recurring revenue that's unmatched. They can afford to have cheaper products because they have such a recurring revenue nature of their business that if they have cheaper products in their e-commerce website, they'll probably get more subscriptions because oh man, Amazon's the cheapest and most convenient. We have to have a Prime. Like that's the kind of sticky ecosystem where like this gets lower, but we'll make it up this way. Pinduoduo, it's just this gets lower. There's nothing here. It just keeps getting lower and lower, and you're trying to hope that the more they scale, the more it benefits them because volume will help them out eventually. That's just not the case anymore in this day and age. Like it's the same thing as being a hardware company, like the semiconductor. It's not good enough. You need to be an ecosystem, uh, and I think that's kind of the way the. That's why I mentioned like capitalism is going to get even more brutal because you can't just be one thing anymore. You need to be a platform. You need to be an ecosystem because it's getting easier and easier every single year on creating competing products to your competition that you need some kind of what more what else and Pinduoduo is a classic example of that like what's their I think they're like stupid cheap. Let me see their valuation.
And do a duo.
They're yeah, they're stupid cheap. 11 times earnings is stupid cheap. Like it really is ridiculously cheap. It's just
Not even, but that's not a buy for you, even though it's really cheap. You're just like,
no, yeah, there's a
not,
reason for it though. Like
yeah,
the market's not dumb. Like the
yeah.
market is they know what's happening. Like the reason like that's why when we have these macro driven pullbacks that we're in right now, like I don't go for the cheapest stock or the one
Yeah.
that's like falling knife. Like I go towards the high conviction winners who clearly have a defensible moat because they don't pull back like this unless it's something macro driven. But these cheap stocks or these stocks that are undervalued, there's a reason they're undervalued. So I don't really feel incentivized to buy them, even though they might have the biggest bounce initially. It's all about the longevity of a bounce in the move in 5+ years. And those cheap stocks, there's a reason they're cheap. They're going to stay cheap. They will never get a premium valuation, and you have to be aware of that.
Yeah. It kind of reminds me when you're at like TJ Maxx checking out and there's all that like shit for under $3 on the way out. And you might be tempted, but it's shit.
Yeah,
So
100%.
yeah, I think that's an interesting point. Also on the earnings front in a different sector, Darden, which is the parent company of Olive Garden. I freaking love Olive Garden. I could go on. And Texas Roadhouse and Chewy's and some others. They missed on their earnings as well. I know Sweet Green had a rough go of it a couple of weeks ago. Kind of the same theme we've been talking about, people potentially cutting back spending. I think we have a chart showing the degree to which people are cutting back on eating out at restaurants. Uh, are you for your behavior? Are you changing anything on your end, or have you seen any of this? Because it looks like this is like one of the things where people are like, you know what? I don't need to get the endless soup salad and breadstick combo, even though it's only $11, which is the best value you can get.
Yeah, so fortunately enough, I'm not I haven't had to adjust my consumer behavior. That could get worse. Who knows? Also, I think it's because like I don't have a family, I don't have a mortgage. Like
Yep.
I am in that era of my life where I have minimal responsibilities.
Yep.
That will change eventually. But regarding like Olive Garden, that's middle America. That's families.
Mm-hmm.
Families are struggling in middle America. They are middle class. Like they really are because things are just more expensive than they were a couple years ago, and their wages are not even close to catching up. And if you're a family of four, it's not just like the day-to-day stuff. It's your your kids' education, your kids' sports, your kids' clothes, your kids has to need money for food, all the trips. Like things are getting so ridiculously expensive that pre-COVID, you were able to save maybe less than 10%. Now you're at best breaking even, at best, because the prices got so much higher and the wages just really haven't matched. So I'm not surprised. I really am not. It's like we're not in a great time right now. And I think a lot of the Doge thing, not to get political, but I think a lot of the incentive incentives of it is like we're gonna keep jobs in America type of
Mhm.
thing, and we're gonna sacrifice prices in the meantime because it's really important for people to have jobs.
Yeah.
I think that's a full band-aid. I think you're just kicking the can down the road of the inevitability of automation. Like that's just how the world's gonna go towards. So it's just putting more pressure on consumers' backs next near term that I feel like that might break something rather than people in Pennsylvania keeping their jobs, people in Ohio keeping their jobs when automation will take over. Now, maybe not in years now because of all this stuff, but it's going to take over in decades. It's just inevitable.
Yeah. I so I was like really into Andrew Yang when his book first came out. I think it's The War on Normal People. It just made a lot. I don't know if you read it. It's all about this was like ahead of its time, but it was talking about all the impacts of automation and he focuses in some sectors like the trucking industry, which is a very great job to have if you're middle class. There's a lot of those jobs. Like that's just going to be gutted and it's all going to be within certain kind of pockets of the country. But he kind of like said that everyone's like, all right, weirdo, like universal basic income automation. And then like now I saw him on X and he's basically like told you guys like he was not the best candidate. I think he stepped in it a few times. But if you guys want to kind of understand impact of automation, I thought it was a really well researched book, and he talks about the specific areas. But you're right; it is like it's going to gut some of these middle class opportunities. And his point, I think he wrote it last night, was like, who has the plan? And it's like nobody has the plan. So to your point, it's almost on like an individual basis. Like, how do I look and see how I'm going to add value to society because it's getting dicey.
Well, I think you also need to be open-minded, guys. Like I've worked for the past decade in corporate strategy for Fortune 500 companies. Right when AI came out 2 years ago, I was like, oh shit, this is going to disrupt my industry for sure. And you're seeing it recently when all these big four consultant firms like they're getting slashed, a lot of middle management on these tech companies. That's strategy, guys. Like middle management and tech companies, it's a lot of it's strategy. It's getting slashed. And I think this is a trend that's going to continue, and you need to either adopt the newest and greatest thing or get left behind. And I knew like 2 years ago, I was like, I that's when I started my Twitter. I was like, I think I need to start building something for myself because I can't rely on the golden goose anymore because capitalism can get brutal and we're in a new environment. And I think building something for yourself, your brand, or your like having eyeballs associated to yourself, and you feel like part of a community. Because I think communities are going to be even more valuable. That's the new
Hmm.
currency in the future. You need to adopt and you need to adapt and you need to be able to be open minded, not just like have anger fuel you and it cripples you on doing something else. That's why you have to like, be very level headed. And I think maybe I'm talking like I'm able to say that because in corporate strategy, like all I've always been, you have to be level headed and you have to
Yeah.
be, if you get more information, more data, you need to pivot and adjust. Maybe that's really easy for me to say, and for a lot of people, it's not. But that's my two pieces of advice on the present and also the future. That's a lot closer than a lot of people think.
Yeah. I think that's an interesting point. Like in certain roles, like change is a constant. You're used to this. Um, but like I'm looking at like it looks like they're gonna gut the Department of Education today, which is several thousand people. Like people like that never expected that their job was gonna change, let alone go away. And so that's where it's like I think your advice is really good advice to heed of like it is a reset of like it's not going to be like it always was. Therefore, what's my move? And I think that's going to be, maybe that on the optimistic view, maybe that brings about like new opportunities and people pursuing different things. It's changing very fast. But to your
Well,
point, some people are more accustomed to that change than others.
I mean, I might be super radical with this, but I hated school. Even though I did well, I did really well. I went to UC and everything. I hated it because I thought it was so freaking pointless. And I think that was pre AI. I think in the post AI world,
Yeah.
you have to ask yourself, like, does it make sense to take on that much debt? Does it make sense to commit that many years of your life towards something that doesn't really move the needle anymore, to be honest? Just to be frank. And I think that first 15 years of your life, education's so important, so important. But I think by the time you're a junior and senior in high school and in college, like, you have to ask yourself, like, what is it worth it? It was worth committing your time. Imagine if you got 4 years of real world experience doing something actually in the real world from 16 to 20, and that 21, your whole life's ahead of you. Instead of being crippled into some education system to your 23, paying back student loans to your late 30s, like, that's a flawed system. It's broken. So, and I also think we're paying our teachers at criminal rates. It's
Yeah,
criminal how much they're getting paid.
crazy.
It's like there's they're public servants essentially for being a teacher because they're sacrificing their own well-being in order to educate everyone. So I think maybe if we dwindle down the years, reinforce the first 15 years and pay the teachers well, and just we'll see after that. But like, I don't know, for my kids, like, I'm either giving them a lump sum of cash when they're turn 18 for college, or do whatever you want to pursue. That's
Yeah.
like kind of my strategy, and I think that might be part of like the future.
Yeah. There was a Harris Poll survey. I think we can bring it up in October, but it was like 50% of Gen Z said they don't think a college degree, as they thought of it initially, is worth anything. A lot of them are going into trades. I think that's smart. Honestly, they're
Mm-hmm.
looking around and they're sort of seeing what's happening. Um, but yeah, to your point, it is like I wonder about like the higher ed thing, because it seems like it might be a barbell. Like, you're still going to have your Harvards and everything, they're just going to get more expensive. But then how many future leaders, executives, are going to be going that route versus others? I think there's certain professions, like you're a doctor, you can't just like take a course on YouTube, hopefully,
Mm-hmm.
but maybe there'll be AI to do surgery. Like, we don't know. But it is like, it's not a foregone conclusion where it was before, where it's like, okay, you get good grades in high school, you go to a good college, and you're going to get a good job. That's just not true anymore.
It's
So
not.
it's, yeah,
Well, it's also not, because I think entry level jobs are gone now. They're just, they don't exist. I think analysts, managers, I think those positions will be done in 10 years. I think it's going to be all contracting consultants. If you make your way after a couple years, you'll make it to full time at director. But I think those entry level jobs are forever gone. It's going to be prove it to us, contracting role. If you don't, we'll just fire you and hire someone else. Within a couple days, we'll get someone else. That's the kind of mentality I think a lot of enterprises will have. And I'm part of those conversations. Like, I see the ball kind of forming towards that already right now, anecdotally.
yeah. Well, we're just minutes away from the opening bell. Like, a little bit of an earnings preview coming up here today. We have Nike, which we discussed at length yesterday, FedEx reporting after earnings, also Micron, semiconductors. Shai, I know you've brought up semiconductors a few times. Any thoughts specifically on what you're watching for Micron or the semiconductor space overall?
I mean, the narrative is capex plateauing. So I think, I don't know if Micron will move the needle, but that is the narrative right now in the semiconductor space. Micron's a perfect example of the cheap can always get cheaper. Their whole spiel is memory commodity. It feels like it is, and I think that's something that why they might never be fairly valued. And I think the best, let's be honest, like the best years of the hardware component of semiconductors might be behind us for at least a couple years, at least.
Mm,
So, if I think we're in the middle of that S curve, so if that's the case, I think Micron's gonna be another name that's just gonna be stuck until the next leg. And yeah, it's a tough. Being part of a cyclical industry is really tough because you just never know when it's gonna turn. It's
yeah.
going to turn eventually. You just never know. And Micron's just been stuck. It's just really been stuck. And if they didn't, their time was 23, 24, to be honest, to like really take off and like prove that they have a moat advantage. It's not a commodity.
Yeah.
We didn't
They
really
got
see
a
that.
couple big deals with the CHIPS Act, right? And now that's, is that going to continue happening? Who knows? I
Mm-hmm.
remember they, near where I grew up on a sweatshirt, they were building a big Micron factory, which is a huge deal. In Syracuse, New York, there's just, it's a rust belt. There's jobs all went away. It's either you work at the college or the hospital. So I think that angle of all this stuff is interesting to me, of like how are we creating jobs in places that aren't like the coasts. But it seems
Mhm.
like a lot of that was propped up by government spending. So what happens next, you know?
Totally. That's the dangerous thing. That's another thing. We don't know the implications of the government reductions until like 6 months. Like we really won't. Like it's going to take some time to phase that out. So, oh,
Yeah.
the market's bleeding. QQQ is down 1% now as well.
Oh
Yeah.
boy.
Oh
Well,
boy.
oh boy is right. Well, in other news going on in the market, let's see what we have. I mean, one thing I was thinking about going back quick to Doge and stuff and what we were talking about with like federal cuts. I was thinking like, okay, what are the companies or softwares to your earlier point this week that are going to hurt the most from the Department of Education just going away? Because that's probably was that like Microsoft Team. I don't know what. There's probably certain software companies
I
that
mean, Microsoft for sure
yeah.
is going to get hit because they have the level 6 clearance, defense clearance, and the government essentially is like, oh, we stamp of approval, like we're going to use all your Outlooks, Teams, etc. I don't know if Slack has that for Salesforce. I think that's why they have a monopoly, Microsoft. But I last summer I got really bearish on Microsoft. I was just like, this valuation does not make sense. I know I'm looking through it with Palantir goggles on, but I just feel like the enterprise space isn't as safe anymore for
Yeah.
a Microsoft than it was 5 years ago because of Palantir. I think they had the first mover advantage with OpenAI, but I was adamant that LLMs are a commodity. It's going to be a race to the bottom on any kind of dollars being spent on it. You're seeing proof of that. And that's why Meta, what they did with Llama of creating an open source right from the get go, that was the strategy to do in the LLM space. And it's proving the right one. Microsoft kind of took the other avenue on that. And now you're seeing their partnership with OpenAI kind of not be as strong as you thought it was. And
Hmm.
they are expanding elsewhere for LLM partnerships. And it just feels like what's Microsoft's next thing? Because a lot of their numbers, financials, is financial engineering. It's insensual with OpenAI and their Azure. Like we just, it's so tied up with each other. We don't know what's actually growth outside of that
Hmm.
relationship. And you're seeing Google Cloud pick back up in the cloud service provider space. AWS is still the king of compute. That leaves our what's Microsoft, and I, their valuation needs to come down. Let's just be honest. It has to be. It was a premium valuation because first mover advantage in LLMs, but you're showing that LLMs are just a commodity. Now it needs to revert back to the mean, and that's why it's dead money for almost a year. It just is.
Yeah, I think a lot of people are bullish on Microsoft just because of Satya Nadella. He's he seems like he's a good CEO, I think, by and large. But I'm just reading the news now. He just fired their chief people officer. They're completely overhauling performance reviews. So to your point, I think they maybe recognize they got to do some things differently if they're going to keep up. Let's flip over to the jobless numbers that just dropped. So the jobless claims are showing fewer private sector layoffs, which is good, but ex-federal workers are obviously signing up for benefits in droves. This report just dropped this morning, so we're just catching up here. But the jobless claims that excluded federal workers only rose 2,000 month over month, that's good. We didn't see a huge lot of bleeding in the private sector, but again, as we've been talking about, like watch the public sector because that's where things are getting chopped left and right. Any
Yeah.
any thoughts on jobless numbers compared to previous ones, or is this sort of is this a sign of hope moving forward, or is this just like, back to where you were before? I'm waiting and seeing. Things are all over the place.
You have to wait and see. You just
Yeah.
do. I think we got the first wave. There's gonna be multiple waves. We're not done yet, and I think you're gonna see the snowballing effect happen. Um, Fall of this year is really you're gonna see like what the implications are from all these moves because it just there's a lag. There's a 2 to 3 month lag on the economics of massive layoffs like these. It doesn't happen with flip of a switch. Like people have severance packages. People have some cash they can rely on, and that lasts a couple months before they have to like really feel the heat. And then once a lot of these individuals feel the heat, that's when you see the implications at the economic scale. So it's going to be a 6 month process. And I'm surprised. I'm going to be curious to see the jobless claims come fall, especially when that's in the corporate strategy side. Q3 is when we really start the 2026 guidance of that, of like the strategy of like what should we do, what's some levers we can pull, SG&A wise, OPEX wise. Like that's when you realize, like that's when you start the strategy for the following year. And I do believe that workforce reductions is going to be the easy lever to pull again. It's going to continue and it's going to gain a lot of momentum if the economy, if we're still in a tariff war, it's just going to. So those jobless claims might get even more high, even higher once enterprises participate in what the government's been doing.
Yeah, I think it's always interesting when the data corroborates just the things you're seeing and hearing from friends. It's definitely not. It's not an employees market right now. The power dynamic is completely shifted, as you've called out on the show before. I think there was
Mm-hmm.
the data showing fewer people are even looking for other jobs. They're just trying to keep the one they have. There's this tweet yesterday where someone's like, "The dating scenes, like the job market, stay where you are." It's funny. But I think there's something there, and yeah, it's if you look back to 2020, that's a complete 180. Um,
Mm-hmm.
let's flip back over to what's trending because Tesla's trending again. Surprise, surprise. They are trending today. A lot of people chatting about Tesla for obvious reasons, but they also have a large Cybertruck recall due to faulty exterior panels. I saw some fake news videos showing the trucks just getting crushed under the weight of light objects, which obviously weren't real, but the implication is that these are not very well made. Um, so it looks like they recalled some of those. Investors are obviously on edge about the stock in general. You have big investors like Ross Gerber, pretty much calling for Elon Musk's head. You're a Tesla bull. Does any of this bother you, or are you just kind of like, whatever, I'm focused on the robots?
I mean, recalls only have a minimal effect on EPS. I think people all the time think that it's a major deal. It really isn't, especially on this recall in Cybertruck. It's maybe going to have a 1 cent impact, 2 cent impact. It's very minimal. It's not needle moving, but I do think as a Tesla bull, like this is a really interesting time to be a Tesla shareholder because Tesla has never is no stranger to controversy. Like they've always had some kind of controversy, but the stakes this time feel very different. I It's weird because they are on the path of one of the most ambitious changes in the modern industry with autonomous, Optimus, the lower cost vehicles that are gonna be less than $25,000. Like it's going to there's all these like these tailwinds can completely change the picture of what Tesla, the company, will be in the future than what it is right now. However, Tesla, you have to be blind to not admit that Tesla is facing a brand crisis that is like materially impacting demand. It just is. That's a fact. And if you don't see that, that's part goes back to what I initially said in the beginning of this conversation was you need to be open-minded as an investor in this world we're in right now. They're experiencing a branding issue. It's not just about Elon's personal involvement in Doge. It's also about Tesla is all of a sudden transformed into a political system symbol, an association that now is like now weighs heavily on the consumer sentiment, the company's ability to kind of maintain their competitive position across the Atlantic in Europe, for example, in China. Musk has always been Tesla's most valuable asset. But at this moment, it does feel like he is becoming the greatest liability right now.
Mm-hmm.
And the numbers tell the story. Like while Tesla has repeatedly defied skeptics, delivering like the innovating technology that disrupts so many different industries, their scaling production is at a pace that nobody could have ever dreamed of. But the brand perception is eroding at a speed I've never seen before. Like I know Meta had a really tough PR issue a couple years ago, but
Yeah.
the flip of a switch on their branding over the past year for Tesla, I've never seen something that quickly turn on themselves. Where everyone loved their EV business, especially the far left.
Yep.
Um, that's not the case. Like there's a drag on the demand. It's due to one person's involvement, and that is scary. And it's something that I'm hoping convenience pricing can overcome in the near term, a couple years. But
Yeah.
what if it doesn't? I don't know.
Yeah, I'm glad you brought up Facebook because I was trying to think when you were talking of other examples of companies that become like lightning rods in this way. And like the closest analogy I can think of is Facebook with the Cambridge Analytica stuff. But to your point, like, okay, they have Instagram though. Like if it's convenient and cheap and people like the product, they can kind of get over things. But yeah, like historically, I'm just trying to think of like instances where people were going out into the world and like destroying the products because they don't like the CEO. Like that is, I don't know. Like I'm curious of
Well,
other people. There's certainly other examples. I can't think of any.
well, I mean, best case scenario for Tesla shareholders, this is Meta in 2023. This is like
Yeah.
Zuck did a PR 180 that was just like chef's kiss. But also you have to think about it's different. It's a different product. There really is only one Instagram. Like there's really only one WhatsApp. Like there's
Hmm.
other weird competing products, but you're going to go to Instagram. You're going to go to Gram. You're going to go to Facebook. Like it's a monopoly in what they do, and there's no alternatives. Tesla, there is alternatives. There really is.
Yeah.
So I think he, for me specifically, again, I got into it for autonomy. If he solves autonomy at what he's communicating, he can. It won't matter what people perceive them as because it's going to change
Scoreboard
the
at that
game.
point. Yeah.
Yeah, 100%. But if he can't, and it's like a 3 to 4 year thing rather than like something that might happen this year, which is what he's communicating, this is dead money, and this actually might go below 150, and because you can't ignore the numbers and the delivery side of the business, like you just can't.
Yeah.
It's a sprint on not buying cars and selling the cars. It's down 50% in a lot of key regions year over year. So,
Yeah.
uh,
I think and it's the point you bring up of like the long-term vision of yes, robotics automation, but they need to sell cars now to fund that. So it's like, they need to balance that a little bit. I actually think talking about Tesla, I'm curious what you think as someone who's deep in Nvidia of I think the GM announcement with them was already out on their autonomous vehicles, but I'm a complete like outsider to the new. Like I was like GM like, why GM? Are they like, I know they had the Cruise car, and so like, but like when I was like, GM and Nvidia seems like a weird combo. But do you have any like color on like why GM and how this came about?
yeah, let me pull it up the news story real quick.
Is
Okay,
that,
so
yeah,
so I do think GM, if you guys don't remember why GM, to answer your questions, they tried to solve EVs. They failed miserably. Like it just like I forgot I'm blanking on the name of like what
it
failed for
was the
them.
Cruise, but I
The
think
cruise.
they were fairly accurate, but they had some bad accidents early on that just
Yeah,
crushed their PR. But it wasn't like a terrible product, if I remember incorrectly.
it's just they weren't able to solve it at a rapid pace that they needed to compete with a Waymo or Tesla.
Yeah.
So I do think like when GM shuttered their autonomous division, I think them just getting Nvidia chips doesn't really move the needle as much because they still need to kind of build a manufacturing muscle. They need to still test a lot of the critical things that they failed before. And I
Hmm.
think this is like one of those easy PR wins for them where,
Yeah.
oh, especially for Nvidia, like the reason Nvidia was like, yeah, we'll do it because now there is a narrative that most OEMs are going to go through Nvidia, and that's going to be autonomy is now going to be
Yeah.
commoditized, and distribution will win eventually, or robotaxi won't be as proprietary as everyone thought. Like Tesla would just own autonomy. That is a narrative now that's being thrown out there because of this. But I don't know. This is another thing. Like I have this issue with myself. Like I think Elon is the greatest innovator of my time. Uh, honestly, maybe in history of a greater than Steve Jobs, to be honest. And I I will always bet on him until he fails. He hasn't failed yet. Could this be the time when he fails?
Yeah.
That
People
is a real
change too,
concern.
you know. I
Yeah.
bet on someone. Yeah, I think it's, and I think you brought up something so interesting that I didn't think about with the GM news, but I think is applicable to so many headlines we see about investing. Because I saw that and I read it quickly and I was like, oh, GM and Nvidia teaming up to have their own. But it's really like Nvidia, they sold, like it's a big sales deal they announced. And like for GM, it makes them look innovative, but there's not, it's not like this big strategic go to market thing. And I think when you just read the headlines, I saw Nvidia and GM team up, and I'm like, what the hell? But I think it's a good point. Like when you dig into it, it's like, yeah, you know, they sold a lot to GM. They're going to talk about it. That's great. They get money. And
I
on the
mean,
other side, GM gets halo effect from Nvidia.
you got to think of it as this. Like, if you're a chef, you have some Kansas City distributor who's like, oh, I'm going to give you our finest Wagyu beef. Here you go. You still have to learn how to cook the meal and
Yeah.
present it and like figure out all the stuff to put around it. That's essentially like they haven't been able to solve that GM before. Like they don't have a chef that's actually applicable in the kitchen. Like they can doesn't matter how good of a beef you have, but you have to figure out how to cook it, season
Mhm.
it, present it. Same story for yesterday's GM news. Like they still have a lot of holes they need to figure out. And this was a nice partnership. But like it's not needle moving. Like they still have to figure out a ton of stuff in the future.
Yeah. I'm trying to right now figure out what's going on with Constellation Brands because it appears they are making moves, but I'm not seeing any stories, and I want to verify that what I'm seeing is correct here. Um, but it looks like let me pull it. Yeah. Uh, oh, okay. Yeah, wrong ticker. What's this one then? They'll get you. Forget that. Constellation is not moving materially today. Another STZ is moving. Um, let's look around at what else we got going on today. We have FedEx coming up. I know we talked about that one briefly. Any predictions on that one? Do you watch that stock? Is that of interest to you, Shy, or is that one you're kind of just like passively following?
Passively, but it's a good data point on consumer behavior. If
Yeah,
people are also not buying as many things online, but I don't
yeah.
know. I feel like I get a lot of that information from Amazon, like FedEx. They waved their white flag, to be honest, to Amazon's logistics network. Like they just like they completely waved it, and you saw what happens when you wave a white flag, and that means you don't really have a competitive advantage. Don't have a moat. Like if you have to ask like, what's FedEx next like growth lane? It's just like are there just gonna be a financial engineering stock or just buying back stock? It's gonna be cheap. Just buy back stock with the cash. Uh,
Yeah.
that's how I viewed it. And I just think FedEx is just like, if we are in a consumer recession, like they're gonna get destroyed. And also, who knows? Like, I don't know. I'm talking out my ass here, but like, does the government use FedEx a lot? And if there's less government employees, like, does that
Uh,
impact their business? You have to think of it that angle as well.
Yeah. I think that one too is one to watch on the guidance because it's maybe less about what happened and more about what do they think's going to happen. And
Mhm.
so are they going to be a little more conservative on that front? And if that's the case, like what are they seeing in their data that is the reason for that? So I was just trying to find this has nothing to do with anything. There was a meme going around of this guy who's a U.S. postal worker, uh, and he has the coolest outfit, but that has nothing to do with anything. I was gonna pull it up on the fly. Um, anyway, um, so yeah, we have a lot going on today. Let's check in one more time back on where we're at. Looks like we're still squarely in the red on Dow Jones, S&P, Nasdaq. Do you think this is gonna continue throughout the day today, Shy?
I think we're range bound. Like, I just don't think we have enough ammo to have a recovery. I don't think. I think a lot of the tariff has been priced into the stock market already. So like, I think we're just stuck in mud a bit until we get more information on what the next move is going to be. I am being defensive. But doesn't mean you have to be bearish. There's a difference. Being defensive and bearish is completely different things. Defensive is I'm raising cash. I'm not really using that cash, and I have a DCA plan where I just put cash in my portfolio every week. I'm going to probably continue building a cash position without participating in the market. If it goes up, great. Oh, I'm 90% invested right now. I'll benefit. But if it goes lower and that's the next move, I'm going to have a 10% cash position to infuse to buy the dip. But right now, I'm in wait and see mode. You don't have to participate. Be defensive, but I also wouldn't be bearish right here. I think we're in this awkward gray area or of just like we'll see what happens next move. I will say we didn't even the pre-market low, like we didn't break Tuesday's low in the market. So that's like a level to watch. Like if we violate Tuesday's low in the market, that's worrisome. We have next leg down, but we're still below the 200-day moving average. So as long as we're below the 200-day moving average, I am just being a geezer with like my investing style. I'm just like being slow and meticulous.
Yeah, which everything we talked about is hard right now because we're so used to reacting. So while you're being defensive in your portfolio, we hope all our viewers will be offensive in voting for Shy in the hashtag awards. Josh Brown has asserted his power and taken over. We love Josh, but we can't stand for this. So go to stocktwits.com/awards. Vote for Shy. And the award ceremony is April 30th here in New York. If you're in New York, we'll be there. The whole crew will be there. You can come and watch, but definitely go vote for your favorite creators, brokerage platforms, trades, community members. We hope to hear from you guys there. And with that, that's it for me and Shy this week, but we're going to have a lot to cover come Monday. So we hope we'll be back here with us 9 a.m. Monday and we'll do it all over. Bye, everyone.